Hi, so today I thought it'd be cool to take a look at the company Nvidia because I've had my eye on this company for quite some time now. And they've just released their Q2 earnings results, so let's go take a look at what's going on with Nvidia. Oh, and by the end of this video, it'll be very clear whether this company is a really good investment or something to avoid. If you're new to my channel, well, welcome, and my videos are about investments that anyone in the world can make. And out of all the different investments there are in the world, I think the stock market is one of the best places to put your money. But unfortunately, the harsh reality is that 90% of all stock market investors, well, they lose money. That's incredible. And every year, new people get sucked into the stock market thinking it's their way to get super rich really quickly. And well, they make lots of mistakes and they end up losing money. So my goal is to help as many people as possible actually truly understand what it is they're investing in when they're putting money to work in the stock market. So to do that, we have to analyze companies. So let's now start talking about Nvidia. Now, I've been watching this company for a few years now, and as you can see, the share price has exploded. I remember looking at it when it was $150. And that didn't seem that long ago at all. So something is going right for Nvidia regarding the stock market. But is it a fair representation of the value of the company? That's the question. So you might have heard of the GeForce graphics cards before. It's one of the options that you get when you're building your own computer. And it is fair to say that they are the top player in the graphics card space, and they have been for quite some time now. Nvidia's graphics processing units, or GPUs, are used for competitive gaming, professional visualization, and cryptocurrency mining. So in plain English, a good GPU makes your computer handle 3D graphics better. Now, riding on the coattails of the cryptocurrency boom, well, their products are a big part of processing power for supercomputers around the world. But I actually think the more interesting news at the moment is that the 27-year-old Nvidia has actually turned quite an interesting corner. Because what's happened is their data center sales have actually surpassed their video game chip side of their business, and it's the first time that's ever happened. So it's been long known for its graphics cards for video game play, but now it's made significant inroads into the data center area. Now, it's in large part because the graphics processing units, or GPUs, that are good for games are also capable of tackling complex artificial intelligence and machine learning tasks as well. So in a similar style to Intel, well, innovation is the key to growth for Nvidia. And I see this as a little bit of an issue because they're always going to be needing to reinvent and recreate just to stay ahead. And this is probably one of the most fast-moving industries in the entire world. So the competitive advantage is the key for any business, because without a competitive advantage, well, competitors are just going to come in and eat away at the profits. So what makes Nvidia better than the rest? So I think the first competitive advantage they have is they have a more high-end niche market than Intel and AMD. They are the leader in the high-end, and I think the high-end market is the best market to be in. Computer gamers need serious processing power, and supercomputers need big power too. Talk to any computer gamer. A jumpy, laggy computer when they're playing a computer game is one of the most frustrating things. So the high price Nvidia products are totally okay, as they solve a very painful problem for gamers. And the second competitive advantage they have is they have a 7-year head start on the competition regarding this artificial intelligence GPUs. See, Nvidia's GPUs are already part of the supercomputers around the world and have dominated this space. So Nvidia is really an investment in the growth of artificial intelligence. They have a big lead over Intel and AMD in this particular space. But like any area of fierce competition, eventually this competition will start catching up. So to say that Nvidia will be the biggest player in the supercomputer or artificial intelligence race over the next 10 years, well, that's just a guess. But the good thing for them is at least they've got a head start. And because of this head start, well, at least we can see that they're going to benefit from the short to medium term of the AI growth. So it is reported that the market for deep learning chipsets will increase from $1.6 billion in 2017 to $66.3 billion by 2025. So I am actually totally on board with the medium-term future for Nvidia. I really like that they have the best GPU on the market, and I also like that they're sort of in that high-end niche marketplace as well. So the Q2 earnings report for Nvidia looked a little like this. The earnings per share was $2.18, and that's up from $1.24 year on year. So that's over 75% up. And the analyst thought it was going to be $1.94. Now, the revenue was up 50% year on year, and gross margins now 66%, and that's up from 60%. It's all fantastic signs here. So I would have thought that the market would have been really impressed by these results, and maybe the share price was just going to skyrocket after this news came out. But actually, nothing really happened. Actually, the share price was a little down, if anything. So then I thought, well, maybe the CEO offered some weak guidance when he was speaking, so I went and had a look for that, but it was really the opposite. We're expecting a really strong second half for gaming. I think this may very well be one of the best gaming seasons ever, and the reason for that is because PC gaming has become such a large format. So the future looks really bright. The space they are in is growing exponentially. They have good competitive advantages. They have smashed their Q2 results, and the CEO couldn't be more positive. So what else do we need to know? We should just give them all of our money, right? Well, this is only half the story, and this is the big reason why a lot of investors get burnt on the stock market. They get to just this part here, and then they invest. See, people get sold on this amazing story, but they don't actually look at the real value of the company. So the question still remains, are they a financially strong company, and are they at a bargain price? Now, there are three key areas to the health of any business. Do they have too much debt? Are they growing? And are they a well-managed company? Now, just sit back, don't worry about the terminology, just get a bit of a feel for what's going on here. So it is really important to look at the company's debt, because if the business was to completely stop for some crazy government decision or a factory burnt down or something unforeseen, well, with low debt, they're going to be totally fine. And what we're going to look for is what's called the debt to equity ratio and the current ratio of the business. And this will give us an indication of whether they can handle their debt. And for Nvidia, well, the debt to equity is looking good at about 0.5. I want to see it under 0.7. So this has always been at a manageable level, which I like. For the current ratio, I'm actually looking for above a 1.5 normally, and Nvidia is nearly at 10. So they have zero concerns regarding debt. Let's just move on. Now, we already saw incredible year-on-year growth from the latest earnings report, but let's go back and take a look at their history, because we want to make sure that this crazy earnings growth that we're seeing right now isn't just some rare event. So in the finances, to check for growth, I want to look at the book value per share, the earnings per share, and the operating cash. This is Nvidia's book value per share, and this is definitely the growth we wanted to see. It is consistent and improving. Now, Q2 actually isn't shown on this graph for earnings per share, and Q2 will be their best quarter ever. So the trend is still in the right direction. So all good signs here, and I think we can just give them a pass. Now, we can't just go and have meetings with all the management team and sit down and talk to them about how everything is going. But fortunately, there are some telltale signs in the financials to tell us whether the management team are making some good decisions. So I'm going to check for the return on equity, the free cash flow, and the cash on hand. So for return on equity, I want to see it above 15, as it shows management are improving the value for the shareholders. So Nvidia's as being above 20 is great, and it's what I wanted to see. The fall in 2020 looks bad, but it is really okay. There is no signs that this will be a fall below 15 anytime soon. This is Nvidia's free cash flow, and this is really how money is going to return to us as shareholders. So more good signs here from Nvidia with free cash flow growing. This is really simple. This is literally just the cash that they have in their bank. And as you can see, it's growing, which will give them options for the future for investing, share repurchases, or other ways to improve the business for shareholders. So we can definitely give them a pass for being well managed. Now, from a financial point of view, I can't really fault Nvidia. They can handle their debt, they're growing, and they look really well managed. So the last thing we have to do is go and see what the intrinsic value calculator suggests is a fair price. So here's a look at the intrinsic value calculator. Again, it's in the description below if you want a free copy of it for yourself. And I've just used 17% as my first growth rate for Nvidia, then 15% for the years 6 to 10. Now, this is about what the analysts are expecting. So my return on investment goal is 22%. Now that gives me a really strong margin of safety. The multiple I could sell it for after 10 years is, well, I'm going to put it at 15. Now at the moment, the multiple is a lot higher than that, but mature companies sell for somewhere between 10, 15, somewhere around there. That's why it's 15. Now, operating cash flow minus maintenance capex, I've already put that in as 5,000, it's actually 5 billion. And then shares outstanding is 622, that's actually 622 million. Now, the price that I want to buy it at comes to about $115, $116. Okay, now that would be a great price to buy Nvidia at. Just to be a little bit more, I guess far less conservative, is I put in far higher growth rates. I'm talking 30% for the next 10 years. Now, that's far beyond what the analysts are expecting. So we're expecting big growth in this area, and something far more substantial than what the analysts are thinking. I've also reduced my return on investment goal, or the discount rate, down to 20, and it says I would like to buy it now if I was really, really optimistic at about $305. Remember, that's super optimistic. So do I think Nvidia is a good company to invest in? Oh, but I went a little bit fast here. I haven't actually checked the share price yet. So the share price right now, well, this is late August and it's at $480. So wow, this is a crazy high price. Nowhere near my intrinsic value calculation of what I would want to buy it at. So although it's a really good company and I'd love to invest in it one day, well, I'm not going to pay anywhere near the price it is now. Okay, so let's put all of this together. Nvidia, well, it's a financially strong company. They have a decent medium-term advantage. They are in the high-end market, which I really like, and they are a lead player in a rapidly growing space. So really, they tick all the boxes I would be interested in, except the price. They are incredibly overvalued, even with optimistic growth rates. Now, I'm not the only one who thinks this is overvalued. So I've pulled this image from a website called Simply Wall Street, and they use a different method to calculate value. Now, I don't completely agree with their method, but they think it is even more overvalued than me. And that's rare. Normally, I'm the one who's far more conservative. So we really are not even in the ballpark regarding a fair price. And I also want a margin of safety. So to get $115, well, that doesn't really seem very possible, does it? So for now, I might as well just forget about the company and move on. I'd love to hear your thoughts about this investment because I'm sure a lot of people out there think Nvidia is a great company to invest in. So please hit subscribe if you enjoyed this analysis and I will see you in the next video.